Hi, I'm Chris Reid, Managing Director and CEO of Australian listed company Neometals.
Chris, good to see you. Welcome to our sunny shores again. You're here a lot.
It's surprisingly warm, I've got to say, for this time of year.
It really is, actually. But you've been in Germany as recently as yesterday. Doing what?
So we have quarterly board meetings for Primobius. We've obviously got people over there in Germany and Austria. So, checking in with them. We've just had strategy and board meeting days Monday, Tuesday.
Okay. But give us a bit more than that. You're being poker face with me here. You're quite close. You're quite close to actually getting on the ground and actually starting to build stuff as well, aren't you?
Yeah, look, it's an exciting point. We start putting our facilities down at Kuppenheim, so we start putting our sea containers, workshops. We get access to the Kuppenheim plant, I think Monday the 27th of November, and start installing the smoke. We expect to get the hub purchase order in the next month. The SMS guys are very keen to get that, as keen as we are, because they're footing the bill and funding the long lead items.
That's what they want to do. It's what they do best, right?
All they want to do is build more plants.
Right. Okay. Let me talk to you about the marketplace. Okay. I think we're got to talk about what's going on. Okay. All equity's being beaten up, so that's the kind of backdrop to this question. You guys have seen some severe downward pressure in the share price, despite moving the sequential projects along. Why?
Well, I think, look, we're pre-revenue. All of our technologies produce battery materials from, and the predominant one is obviously the battery recycling. So battery materials are down 60% in pricing over the last 18 months. That is a tide that you can't swim against. And look, we're no lone soldiers. So if you have a look at our peers, depending on who you look at, all of the lithium guys have come back. You look at, tech players like Novonix, pre-revenue, and look, we've all had annus horribilis, right? There's no gilding the lily, right? But, in terms of the strategy, the market doesn't change our strategy. So it is a low risk, low capex strategy, plant supply, technology licensing, not spending lots of capex or shareholders' money. And we do have a bridge that needs to be crossed before the royalties start to come in sort of mid-25 from our first commercial plant, which will be for Steel Company of Canada. We're planning on getting a purchase order for that in March next year. But, at the moment, like last year, we were a 1.1 billion market cap. And I couldn't work out why. We're pre-revenue, we're not product ready, all the tailwinds, and then all of a sudden, everything changes. It's risk off, commodity prices are down. There's an oversupply of batteries in China. The lithium price has gone from $60,000 or $70,000 a tonne to $25,000 a tonne in China. It's higher, obviously, in the West. We've made significant advances in de-risking the business, getting to product readiness, the purchase order. So we've got revenues coming out of our Hilkenbach disposal operation. We've got an order book for the first time. So we've got 12 million euro in the order book at the end of September. We would hope to get that to sort of anywhere between 18 and 30 million next quarter. And then we're hoping to get the Stelco equipment package purchase order in the first quarter of 24. So, we make money on the plant supply, but then you're going to have visibility once we announce who they are, how big the plant is, what we're designing it for, what it should produce. Then that translates into royalties once they're built, commissioned and operating at steady state.
Right. It feels to me that you kind of got a lot of shareholders who are sticking with you because you made a ton of money for everyone. I mean, dishing out dividends for them off the back of Mount Marion, right? But they're natural resource investors. You're moving over into this kind of more industrials sector, which is a bit hard to kind of understand and do peer analysis and quite frankly understand the economics of what you're about to do. With, like I say, we're talking about, you've got to go this sequences of monetization that you've got. Okay, so we're starting in Germany. We'll stick with Germany. You've explained some of the PO process and some of the build process, but what I don't understand, it really is the timing around you starting to have regular, reoccurring revenues on a quarterly basis.
And so that comes out of, I mean, look, like I said, when we get a plant, it gets built and we make money in installments, right? But, how we design the business, we've designed Primobius to supply the plants, have back-to-back contracts from SMS, run Hilkenbach, do the research and development. Then we've got an IP holding company that collects the royalties, that has very low operating costs, that can put the money back up into the two shareholders.
Right, okay.
So that's how it's designed, right? So we designed Primobius to essentially wash its face, and the royalty revenue from the products to be in a separate company, which is an Australian holding company, not a German company.
Yep.
So that we can add with very low holding costs. So, Primobius has to pass on 96% of the royalties that it gets collected through to that. So our first commercial plant where we've agreed a royalty, a 10% gross sales royalty, is with Steel Company of Canada. So if we start building the spoke, we start building that in the first quarter of 24. It's finished and starts commissioning in a year later. And then we'll get revenues from the black mass sales. We'll then, after we've finished building the spoke, we'll move on to building the hub. Then the royalties increase by the end of the following year.
Right. So, okay. So that simplifies it a bit for people. So think of it like a royalty company, effectively, where the growth and the continued revenue will come from. But you're kind of like building your own royalty in a way, and a physical building process,
exactly. Instead of putting out money, you've already sunk your money, and you don't have to go to the market to get cash to buy royalties, right? So, if we have a look at history, and we have a look at lithium mining, and the lithium miners can get on a PE of 3, 4, something like that. The chemical producers can be 10 or 12. The royalty companies, like Lithium Royalty Company, trades on a PE of north of 60 or 70. Right. So, for us, each of the royalties out of each 20,000 ton plant, right, our royalty at current sort of prices is about US $1,000 a ton, of which Neometals would own half. So, if you're trying to get the most value in the shortest amount of time, and you've got earnings, what is the highest PE? So for us, we'll be building plants that'll last 25 plus years if properly maintained.
So I want to bring us back to mining sector. So in terms of life of mine, we're talking 20, 25 years.
Right. Easy. You've got 8 products that come out.
Right.
And you've got them with, at this stage,
selling
with tier 1 customers, right? So you've got Steel Company of Canada. The first pilot plant for Mercedes is royalty free. It's a dinky plant. No disrespect. It's 2,500 tons.
Show a route to market. That's what you're doing there.
Yeah, well, it de-risks it. So, Mercedes-Benz got a big German government grant. The majority of that comes to us to buy the plant and run it. So the 3 elements of the Mercedes relationship are 1, plant supply, 2, a 5-year R&D collaboration, stuff that we would have to do anyway. But we're doing it on, the latest cells and chemistries with a marquee brand in the EV industry, right? Or just the car industry. And the third part is we've got to work with Mercedes, and are working with Mercedes, on providing them an industrial solution. These guys are going to be producing 200 gigawatt hours of cells by 2030. That's 900,000 tons of cells, which will generate somewhere between 100 and 200,000 tons of scrap. That's between 5 and 10 20,000 ton plants, right? So, what a fantastic customer to have. So, like I said, you've got long life, and they've got a long tail. It's not like a mine where, we're seeing all the royalty companies, the precious metal royalty companies, the PE is going down because the costs are escalating quicker than the gold prices escalating, right? Which, all things being equal, shortens lives. We're not really subject to that. So even if a new technology comes along, sodium ion or whatever, you still have to process yesterday's batteries in 10 years' time. Yes, you won't have production scrap, but you'll still have to get the other 90% that made it into cars. So, they're very long life royalties. They'll be with big customers and quality customers, and you get 8 revenues out of it. So lithium, nickel, cobalt, copper, aluminium, those top 5 are about 90% of your basket of goods. You can hedge them on the LME. manganese, carbon, and ammonium sulfide. So, I mean, what would you, every plant is a diversified royalty stream.
Well, I think you've done a good job of kind of explaining it in mining terms there that people can perhaps, relate to. We're mining above ground, and you've therefore got a line of sight to the materials that are coming down the line. So it's like forecasting and maybe achieving some of those multiples a bit easier. What next? What do you have to show the market next?
For this, look, it'll be the purchase order for Mercedes, and then delivering it, commissioning it, and having it run at steady state, and then moving to the next tier. I think and so when I said sort of mid 25 for the black mass royalties for Stelco, back end of 26 for the chemicals from Stelco, those royalties. Once we get to product readiness, then we can start building more of them, right? Because, an important part of the relationship is SMS building those plants. Once the Mercedes plants operates at steady state by the end of 24, then they're happy to offer us the big refineries and to scale up, right? So, there is technically, we're at the final stages now and over the next 15 months, right, of taking the risk out of the business. We will then, and we'll continue to have, opportunities that are in our business development pipeline pop up. So we're hopeful to get our second spoke out in the not too distant future. That will be, and that's more evidence that we can deliver these, and I think, and people, you got competitors, and yes, there are more people going into the recycling space. But they're merchant recyclers, or they're companies that are wanting to get integrated, right? They're not in the business of building plants for third parties. So, essentially, what we're doing is we're allowing the people that have feed, cell makers and car makers, to get their own materials back to make new cells at the lowest point in the cost curve with the lowest carbon footprint, right? And again, plants built in Germany by a 150-year-old German plant builder. Like getting your own custom car and going from A to B, it will get you there.
Right, so to their own spec as well. Must be said, I think. Right, okay. So that side of things looking like there's a whole bunch of things which are going to be delivered over quarter after quarter there for you, moving towards, maybe we can try and do some numbers off the back of this.
The business has started and it's off.
It's off and running, okay. Can we move on to some other projects? Because sort of the sequences, okay? So obviously, vanadium.
Look, all of those three, and we have our strategy meetings generally in February. So at the start of the year, we're pretty cognizant about, where the market might head, right? So in terms of those projects, the vanadium recovery project, we'd finish the feasibility study, we'd move into the financing. So, what we've done there is lined up the banking syndicate. We've gone through a process to get our preferred equity partner. Now we're currently negotiating with a view to getting binding agreements by the end of November for that. It's been a difficult market, but we've had fantastic support from the EIB, the Finnish government in guaranteeing 80% of the face value of the commercial debt. It's been brilliant. So, we're negotiating terms now with that banking syndicate and the equity syndicate, but we will dilute down. So we own the technology 100%.
Be clear about what you mean there, because then people might get confused. You will dilute down what?
So we will dilute down equity in the first project.
Right. Okay.
So rather than having a massive capital spend, it's a 400 million euro project.
Yeah, but you're not diluting Neometals.
Not diluting Neometals. We'll dilute a project vehicle, right? So the first commercialization. We retain the royalty that goes to that, so it's 2.5%. We'll move from 72.5% lower. As you can naturally expect, someone that's going to come in with 160 million euro equity piece should be the largest shareholder. Right? I mean, it's 265 million Aussie dollars. That's more than our market cap. Right? So that'll be a very good signal to the market. It'll be fantastic for us. Once we get that executed by the end of November, there'll be a really good look-through value. We'll have an equity percentage of the NPV of the project. We'll have the NPV of the royalty, and our technology will get commercialized. There's also a second project, which the first one's underpinned by SSAB, the second one with H2 Green Steel, and we're looking at options for more plants. So we don't have to own all of those projects. We have to own the technology and license it down. So, we always realize that when you create a technology, you have to put your own money in first, and you have to get it up and running. Then all of them are easier, and you have learnings from the first couple.
Okay.
Right? So that's the vanadium project for the lithium chemical business. So we've been working with Bondelti and co-funding the pilot and the update for the study. So that's still ongoing, right? We were negotiating with, so the parent of Bondelti is called Jose de Moya. It's one of the biggest conglomerates in Portugal. They've set up a discrete lithium business called Lithium, L-I-F-T-H-I-U-M. And so that is now in charge of all of their lithium aspirations. Okay. So we're negotiating a new cooperation agreement with them. Unfortunately, the 30 September date came and went. So we're in no man's land. So we told people, but we will conclude a cooperation agreement with them this quarter.
Okay. I guess what, in really simplistic terms, is like, what are you? Do I say now Neometals is a royalty company?
No, I think that,
because I know you build stuff, but it kind of feels like that's admin, right?
Yeah, look, I mean, I presented to a fund the other day, and they said, well, look, you're going to build the Franco-Nevada battery materials royalties.
It's nice of them to say.
Right. And I thought, wow, someone got the joke pretty quickly. So there's 3 technologies. Yeah. There's projects to commercialise them with strong partners. They are wearing most of the funding requirement. So we're getting commercialised without having to put all of our money in by partnering. So, the low risk, low capex option, we decided to go with, right? So with them, we don't fall in love with the projects, we fall in love with the technologies. They create us royalties, which is a byproduct. We've got to create earnings out of them.
Yeah, no, but I was just trying to work it out, because if they do need to generate, outside the royalties, there needs to be some revenue generated, but it's kind of like they're self-funding the admin bit.
And you will have equity shares. So you build yourself a portfolio of equity shares in some equity. Of those. Exactly.
Okay.
So the vanadium recovery project will be an equity in the project and a royalty. So we leverage our exclusive access to technologies that we own to create royalties and equity interests.
Got it. Okay.
So that they are our business development tools.
Beautiful.
So for Barrambie, we were preparing that for an IPO.
Yeah.
How do you do that in this market?
Yeah.
Right. It's very
Advisors
difficult.
don't. To generally to people, not to you.
Exactly. I mean, look, we've got a background in markets, right? And you can't do it. But the approach was we would do it like we did Mount Marion. You need a take or pay offtake agreement, right? To get hurt money up front, equity or a prepayment, you have to have an offtake with a floor price, and you also have to have a mine to port solution, right? So for Barrambie, we are still negotiating with parties on a mine to port solution. We've been negotiating with 2 Chinese parties, offtake and upfront money. And so we announced that we didn't get to suitable terms on the offtake and the hurt money. So we've moved away from Jushing to another titanium slag producer. Right. We always run multiple options. We don't hitch our wagon just to one.
Okay.
So all that means is a slight delay, right? But we have to put together those building blocks, right? And so do we have to own Barrambie? No, we don't have to own it, but it has to make earnings for us. We don't have to own all of it. So we can look at selling equity as long as we're getting fully funded, free carried earnings. Perhaps we put a royalty on it if we don't get the funds. So essentially, Barrambie is unique in that it is a hard rock asset, and the other assets are technologies and the technologies are our business development tools.
Right.
to create equity interests and or royalty streams.
You can see why it gets confusing for people, can't you? Because obviously Widgie also was spun out as well.
Yeah,
you
well,
come from
look,
Mount Marion, and you've got this Brambly thing, and then you've got all these industrial.
So the vanadium,
right?
yeah, but I mean, look, you know, you're a dad.
Yeah.
Did you want one income stream, or would you like multiple income streams?
I'm glad you said that. I thought you said with children in a second. I was going to worry about it. Multiple income clearly is better.
And do you want them all correlated, or would you like them from different technologies doing different?
Well, this is investing 101, right?
Now, we understand that the market has a preference, so we gave the nickel asset back. It's a unique asset. The titanium asset, we can consider either getting fully funded and retaining a minority, or preparing it for a life on its own. The lithium technology, do we have to own equity in that first plant in Portugal? Well, maybe not, because what we're trying to do is actually commercialize it. We think the biggest markets are in South America and North America for that. Right. So where we can commercialize the technology for the first time without putting money in, but then that sets the business up to create royalties in the future, that'd be great. But most of the time we have to put money in. So we try to minimize the amount of money we put in.
Right. And I think, well, commercialization of everything is really, really important. The focus on the money and how you make money, really, really important. And very few companies remember to talk about that. In fact, most forget to talk about growth generally. But again, for the sake of your current investor base, some of whom are going to be frustrated by how the markets have played out, and perhaps they think, have I made the right call here? I mean, do you think you've made the right call moving away from mining at a time like this into this thematic? Has this been the right thing to do?
Absolutely. So, you know, the common threads of those technologies is they produce battery metals. Now, as a long-term thematic, I can't find a better one, right? But what do? They produce battery materials at the lowest point in the cost curves, at the lowest carbon footprint, with partners that can build multiple plants. They're all scalable. They're all repeatable, right? You take money and you start to look for ore bodies, or you buy ore bodies. Where do you buy tier one ore bodies? I can get tier one customers to commercialize technologies and generate me royalties, right? What's easier? How do I grow the business? How do I get earnings? How do I get rewarded for those earnings with the highest PE? So we're sticking with our strategy. Low capex, low risk, highest return on invested capital, minimizing the amount of capital we put in, and taking a portfolio approach.
That's it, man. That's it.
Thank you.